So, Remco, the Barometer survey is telling us that investors are feeling very positive about private equity. In fact, they're more positive perhaps over the medium term than they are over the short term. How is this varying by investment geography?
In the United States, in particular, the medium-term outlook is positive, but there's a bit more uncertainty in the short term. In Europe, and even more so in Asia-Pacific, the outlook is quite positive.
And what about the political landscape? That must be having an impact.
It does have impact. In the US, the current administration is viewed as relatively business-friendly, but it does come with uncertainty in the shorter term. In Europe, the political landscape seems a bit more stable following the recent elections in the Netherlands and in France. But we do have the UK, where we're still facing Brexit, which has its own challenges.
And the sentiment must be being buoyed by the fact that investors are reporting that net returns have held up at above 11% for about 90% of investors. But what we are seeing is that there's a decrease in the number of investors reporting outsized returns, so returns in excess of 16%. What do you think is driving that?
The market for private equity has matured a lot. The market is now much more intermediated, much more transparent, and therefore much more efficient than it ever was, and that's bringing down returns. Also, we see that investors cannot reach their target returns in traditional asset classes, so we do see an inflow of capital into the private equity asset class. And finally, much like other asset classes, valuations in private equity are very high, which also has the potential to bring down returns.
So what does that mean for allocations?
So we do see an inflow in private equity at the expense of public equity. Investors do expect to make a higher return on private equity than on public equity.
So we've seen an increase in allocations towards other alternative strategies such as infrastructure and credit. What do you think is driving that?
These asset categories have matured a lot in recent history, so they're available a lot more. And investors do clearly like the risk-return profile of these newer categories.
And is that having any negative impact on allocations to private equity?
No, people invest in these newer asset categories alongside private equity, and they do tell us in the survey that they continue to believe that the risk-return profile is very attractive.